The reason this is important, because we're crashing, like it or not. I'm a Marine pilot. I went down 3 times. And the question is not if you're going to crash. The question is, will you survive the crash? And that's what I love about the Marine Corps. We practice crashing every single day. And so when the 3 times it happened in Vietnam, we survived. So my friend, you've been calling this for a long time. The dollar is in crisis, isn't it?
Well, so our economic system is in crisis. And I'm really worried now that we're on the verge of a serious economic crisis that could see the destruction of trillions of dollars of additional wealth before this thing is over.
Yep. And then when you wrote the book, The Corruption of Capitalism, I mean, give me a break. Are we corrupt or what? Has it been corrupted?
So capitalism, in my view, became corrupted at the fundamental level when we stopped backing dollars with gold.
Yes.
And to make a long story, not too complicated a story, but to make a long story short, this unleashed an explosion of credit. Credit absolutely exploded. Total credit or total debt in the United States grew from $1 trillion when I was 3 years old in 1964 to $91 trillion now, from $1 to $91 trillion in my lifetime. And during that process, that created a great deal of wealth, a great deal of economic growth in the United States and all around the world. But our economy became addicted to credit growth. Our economy must have credit growth to stay out of crisis. And now credit is contracting when you adjust it for inflation. So this is a very serious problem for our economic system, which I call creditism rather than capitalism, since it's driven by credit growth.
So that's why both The Corruption of Capitalism and the dollar crisis are essential. I mean, they're more timely today than ever before. And once again, the code is CRASH, C-R-A-S-H, get a 50% discount. Because I want you to pull your head out of your butt and take a look at the world, because Richard sits in Thailand. He's an American. He sits out there and he can see the world, but Americans can't see past their house. Micro is this. You're standing you're pumping gas into your leased SUV, and you're going, why is the price of oil going up? That's micro. I mean, they can't see it. But inflation, I'm afraid, is systemic now. And a lot of it is because what Richard's talking about is creditism. They just print so much money. Instead of solving the problems, they print money. And now it's going to backfire on everybody. So, Richard, there's a lot of things I want to talk to you about. One is the Nord Stream 2, they torpedoed the pipeline. You have the war in the Ukraine. The English pound crashed. Japan's yen is in serious trouble, and I guess North Korea fired some rocket at the Japanese. You have inflation being systemic, and you have the BRICS, B-R-I-C-S, Brazil, Russia, India, China, South Africa, England.
Right. So that was the second blow we've experienced in the last 2 weeks. What happened there was the new English Prime Minister and her finance minister announced very large tax cuts, very, very large tax cuts, with a lot of this going to the wealthy people, the wealthiest parts of society. And that meant that the UK government was going to have to borrow a great deal of additional money just at the time when the Bank of England, which had been buying government bonds through its quantitative easing program, it was planning to start selling government bonds. So suddenly, England looked like a third world country. Its interest rates on its government's bonds doubled in about a 2-week period. They went from 2% on a 10-year government bond yield to 4%. And normally that would make the currency appreciate. But the English pound started dropping like a rock. It fell from 1.15 to the dollar on Monday last week. By Friday morning, it was 1.12. By Friday afternoon, it was 1.09. And on Monday morning, it dropped to 1.03, the lowest in history. And so this huge swings in the currency, and more importantly, in the interest rates on the government bonds, was so violent and so unprecedented that the UK pension funds thought that they had cleverly hedged their positions with these derivatives contracts known as liability-driven investments. But the moves were so large that the people they had these derivative positions, hedging positions with, started calling in their margins, and they couldn't put up their margins. So they got sold out of these hedging positions, and it looked like the entire UK pension system, the various pension funds, were on the brink of going bankrupt.
Collapse.
And so the Bank of England had to jump in, and at the beginning of the week, they intended to start reversing quantitative easing. They were going to do quantitative tightening. But by the end of the week, they reversed course and announced that they were going to do even more quantitative easing. They said they'd buy 65 billion pounds of additional government bonds over the next month or so. And that has restored calm temporarily. And in fact, it's injected a bit of euphoria in all the markets yesterday and today, because the markets and the investors hope that since the Bank of England reversed course and started loosening monetary policy, they hope the Fed is going to do the same thing.
Right.
But it's not.
Yeah, for the Richard, we got to speak English here because these are the rich dad audience here. So the point here is this: what does it mean to the English people? Because their pensions were about to collapse, because and the Bank of England is the Fed, the same as our Fed. And so what does that mean? So when they start printing more money, what does that mean? Inflation, or they're trying to avoid a depression? What were they doing?
Well, the first move is to try to avoid a depression. That was what they had to do first. They had to act as a lender of last resort. No one else would provide money to support the financial system in England. And so the Bank of England said, we'll do it. We'll create a bunch of money and we'll restore order. And they did, at least temporarily.
That's been the problem since about 1998 when LTCM, long-term capital management, crashed, and the Fed had to bail out a hedge fund. And Jim Rickards is a friend of ours. He wrote the book Currency Wars and all that. His question was back then, who bails out the Fed? And I think we're kind of there now. I mean, that's what you've been writing about in Dollar Crisis and the Corruption of Capitalism. Who's going to bail out the Bank of England? And who's going to bail out the Fed and all the Bank of Japan and all these central banks?
Well, the central banks have had it very easy for the last 3.5 decades because globalization was extremely deflationary. It was pushing down prices and the inflation rate was very low, so interest rates were very low. So they could get away with printing a whole lot of money without causing high rates of inflation. Right. And by printing a lot of money, they would buy government bonds, and that would finance government spending and let the government spend a lot of money and stimulate the economy that way. So this was a Goldilocks for 3.5 decades. But suddenly now globalization is going at least partially into reverse. Yeah. First, we had COVID and the supply chain bottlenecks all around the world. Next thing you know, Russia's invaded Ukraine, pushing up energy prices, oil prices, gas prices, wheat prices, corn prices, another big round of inflation. And suddenly the central banks are in shock because for the first time in 35 years, they have to deal with inflation. And inflation in the UK is at 10%. It's 10% in Germany. It's practically 10% in the United States. And so now, if they try to support the economy by printing more money, that's going to just fan the inflationary flames. But if they don't print more money, then credit's going to contract and the economy is going to spiral into crisis.
Yeah, because the English people still have no idea. Most Americans have no idea what happened, and they actually believe the Fed can save them. But as my friend Jim Rickards says, who's going to bail out the Fed? Who's going to bail out the Bank of England? The central bank system is under crisis also right now, and that's what Richard was alluding to 20-something years ago. And so the question is next is, what's happening in China? I mean, they have the biggest bubble in real estate ever, right?
Absolutely, and well beyond real estate. They have excess capacity of everything on a mammoth scale. I once was told by a Chinese professor that in his town, the city government had built 2 beautiful big new bridges. The only thing is they hadn't built the river yet. So I can't talk about what North Korea is doing, but I can say something about what's happening with the yen. The Bank of Japan, the Japanese central bank, is determined to keep their interest rates at a very low level, even though interest rates in the United States and everywhere else, most other countries, are going up very rapidly. And so if the US interest rates are 3.5%, Japanese interest rates are only 1/4 of 1%. And the Bank of Japan plans to keep them there. And they can do that. But that means no one's going to want to hold yen because you can't earn any money if the interest rate's 25 basis points. They want to sell their yen and buy dollars. And because the dollar, you can get 3.5% interest. That means the Japanese yen is falling. It's at a 20-year low. And unless the Bank of Japan changes its policy, it looks like it's going to keep falling.
Right. And this is the thing, and I'm fourth generation Japanese American, and I always laugh about it because, so the Japanese per capita have the highest savings rate of all, demographically, the highest savings rate of any population. And that's why the Japanese aren't the smartest. Why would you save money when the governments are printing it?